Howdy, Jacob here. Today we're looking at Obsidian Energy, ticker symbol OBE, in the oil, gas, and consumable fuels industry. Company doesn't say when it's founded, but has changed its name in 2017. Don't really care about that. Development of oil and natural gas properties. You can see that growth the last few years has been astronomical, but there was quite a bit of sell-offs from 2014 to 2017, I presume. And I actually don't see that. So that's, well, actually, yeah, you could see that maybe here in the capital expenditure side. And we see capital expenditures the last couple of years have been in existence. That's pretty interesting. Heavy decrease in the last year on income, though. 677 mil down to 560 mil. Okay. Return on invested capital in the last 2 years been um, pretty substantial, but recently, last year, nothing to brag to your friends and family about though. No cash on hand with 162 million long-term debt. Okay, interesting. But they produced 263 million in. Hmm, this is interesting. So when capital expenditures dropped off, it looks like it just moved to other. So maybe cash from operate or free cash flow is not quite as high as what it says, but use of cash, repurchasing shares, a little bit of repurchasing debt. I would say that yeah, I'd want this company to buy back some of that debt or have at least some cash on hand because having 162 billion long-term debt not concerning if it's super far out, but to have zero anything in cash is pretty concerning. I mean, even if you had a house and you were making, 50,000, 60,000 a year, to have $0 in reserves can be a bit scary. And so yeah, they likely have capabilities of credit facilities to go to, but that's that's no liquidity. There's none. So I would want this company to have at least a little bit of cash on hand because times can go bad pretty quick, and yeah, you can be in trouble even quicker. So keep that in mind. But let's get to our assumptions here. Revenue growth. Let's say, I mean, I have no idea what I'm going to presume. Let's do my 3 and 13. I haven't done this in a while, but if I just have no clue, I'll just be like, if it's all over the place, I'll just be like, okay, let's say it grows with inflation and has an inflation like protection at the end of 7 years on the P price to free cash flow side. As for margins, that looks a bit high. Maybe let's do a big range, 10, 20, and they buy back 1% of shares. Okay. It looks like it's decent, but I'd have to do more research on this company because the numbers are really all over the place. I'm really not getting anywhere, but um, even still, it's still not at the price where I do more research. So hopefully you enjoy the video. Have a great rest of your day. Thank you.